Welcome to the Brigham Young University Family History Library webinar series. We thank you for joining us today. My name is Braden Knutson. I'll be your host for this webinar. We'd like to ask you to answer our polls that we have down at the bottom of the screen as we go through our announcements for today. Our next webinar will be on Friday, March 31st, so that's tomorrow at 4 p.m. Mountain Daylight Time. And James Tanner will be returning for us again tomorrow. That'll be a good one. We encourage everybody to come join us and come with questions. We always love your questions. Um, Also, on April 7th, so Friday, April 7th, we'll be having another Family Search Family Tree question and answer session with Catherine Grant. And we would ask you to submit questions ahead of time. You can find a link on our April webinar schedule where you can submit those questions there, and we will have a good question and answer session for you. Also, if you have any suggestions for future webinar topics, feel free to email us at fhl_webinars@byu.edu, and we'll try to incorporate in as many topics as we can. So today we'll be pleased to hear from James Tanner, who will be giving a presentation titled Tax Records for Genealogists. James Tanner has a bachelor's degree in Spanish and a master's degree in linguistics from the University of Utah. He received a Juris Doctor degree in law at Arizona State University. He served for 2 years as an intelligence analyst for the U.S. Army and 39 years as an Arizona trial attorney. He has previously owned a retail computer business and an Apple Macintosh software company. James has over 35 years experience in genealogical research and is an avid blogger of Genealogy Star blog and Rejoice and Be Exceeding Glad. He served for 10 years as a missionary at the Mesa, Arizona Family Search Library and is currently serving at the BYU Family History Library. He has presented at expos and conferences around the U.S. and Canada. James has 7 children and 33 grandchildren. So we will turn the time over to James now, and as everything's loading up, remind you that we have a comments box and a questions box, and we'll make sure we get all the questions answered by the end, so we'll turn the time over to James now.
Howdy, this is James Tanner. Glad to be here on another BYU Family History Library webinar presentation, and remind everybody that these webinars are recorded and they're uploaded to our BYU Family History Library YouTube channel, where you can view them at any time. We are going to talk today about tax records for genealogists, and I recall the old saying about there's no ill wind that doesn't blow some good. And although taxes, and particularly, I think this is a very timely presentation, being here at the end of March, just before our infamous April 15th. But on the other hand, we learn as genealogists that many of the great tragedies of the world provide us with records, and so we benefit from those things happening, and taxes are one of those areas. Maybe they're not the greatest tragedy in the world, but they come close, and they are something that provides us with a wealth of information about our ancestors. First of all, we need to get into the idea of that death and taxes may be inevitable, but on the other hand, they are also profitable for genealogists, and I guess for the governments that levy them and all of the different levels. They must be making a little bit of money. We have to think of these records as being the genealogist's friends rather than as our enemies and our antagonists. Okay, it's enough of that. Some of the earliest records that we have, particularly those in the Western European area, are records of taxes. In this particular case, we have what's called the Doomsday Book. And even back then, they considered taxes to be somewhat of a major event in the world, and they called this the Doomsday Book. It was right after the conquest of England by William the Conqueror, and a few years later, after 1066, about 1085 AD, they decided to find out what everybody owned, so they could figure out what kind of revenue they could generate from this newly acquired part of their empire. And so they began this book. And the Doomsday Book, by the way, is the first listing of individuals, the earliest listing of non-royal in the sense of not being the kings and whatever of England that we have. So that's kind of the benchmark for old records and for tax records. Now let's kind of look at the idea of what kind of taxes are there. Um, we probably think almost in this time of year, at least immediately, of income taxes, but income taxes are not generally, at least historically, something that would be of a great significance. Even the United States, most of the history of the United States, there were no direct income taxes on people's income. So what are we looking at when we're talking about taxes? The first and probably the most common is real property taxes or real estate taxes. I think we all, and if you own property here in the United States, then you're familiar with the process of receiving an assessment, an annual assessment from your county tax assessor, and then a levy of a tax that needs to be paid. If you're paying a mortgage and you have your property financed, the cost of those taxes is probably included and prorated throughout the year as you pay your property taxes. But these property taxes go back almost to the day they walked off the Mayflower. Well, actually, that didn't happen because of some difficulty that the early Mayflower passengers had. Arriving in the middle of the winter was probably the worst problem, but also the fact that they were in the wrong place and didn't have any title or ownership to the property when they landed. They had to send back to England the following year to see if they could negotiate some kind of title to the land, because what they'd done is they'd landed in Massachusetts and they thought they were in Virginia, and because their contract for property was in Virginia, they had no contract in Massachusetts. Kind of an interesting situation that happened back there with those people that we visualize in black hats and old buckled things, which is not what they wore, by the way. That's just sort of made up stuff. But they did start levying taxes and assessments on property as soon as they had the ability to do so. Personal property taxes. We often don't think of the fact that we actually pay personal property taxes. We don't pay them like they used to. Now, historically in the United States and in America, before the United States existed, there have been all sorts of different kinds of taxes, and we'll talk about some of those as we go along here. Some of them might be a little bit surprising to find out about. Of course, we now are saddled with and have rather entrenched income tax, where we are paying a percentage of our income in a very complex system of assessment that we have here in the United States. Value-added taxes. If you're a retailer or you sell property of any kind, not real property, but personal property, anything from cars to down to dry goods or things, even food in some places is levied with value-added taxes. A value-added tax is takes whatever particular product is sold and levies a tax according to the value added or the profit or some base amount over the cost of the item that is taxed. We also have use taxes. Most of the use taxes that we have in the United States particularly are disguised as sales taxes. So we call it a sales tax, and the government calls it a use tax. So when you buy something from a store, you're actually paying a use tax. So you end up having to pay for it regardless of whether or not you actually use it. As a matter of fact, it's not the sense here isn't that you're actually using the product. It's just that you are not being, it's not the sale transaction that's being taxed. It's your acquirement and use of the product that is being taxed. So they kind of get around it. It's kind of a complex situation there. License fees, sometimes we don't think of these as being taxes, but they are certainly in any kind of abstract conceptual way, they are taxes. So if you have an automobile and you own an automobile someplace in the United States, you probably pay an annual license fee to have your car license, and you may pay a license fee periodically for a driver's license. If you are a professional of some kind, you may be paying a contractor's fee to the state. You may, if you're some other kind of business, you may be paying license fees to run a beauty parlor or even a dog grooming business, or anything that's out there that they've thought of as a unique business may have a license fee. And now there are gradations and all sorts of everything else that you can imagine about that governments can think about to tax. So if you've rented a car lately at an airport, if you've flown somewhere and rented a car, I would invite you to pull out the receipt you receive from the car rental agency and look and see. You'll probably have 5 different kinds of taxes levied on the rental of that car. So they can come up with all sorts of innovative and interesting things to tax and ways to get revenue out of almost every kind of transaction that occurs in the country. Now, all of these fall into 3 main categories. There are really only 3 different kinds of taxes out there. First of all, we have head taxes. In other words, taxes that are levied simply because you exist as a human being. And depends on what part of the country that you come from in the United States as to whether or not you are aware of a poll or head taxes. Secondly, we have real property taxes. That includes everything that is charged you as a result of using or having and owning your property. Whether you rent it, whether you own it, whether you do whatever you do on the property, you probably are going to run into some kind of a tax issue. And the last one are personal property or income taxes. If you think of your income as your own personal property, then these 2 fall in the same category. Any kind of levy on an item that is possessed by someone and either sold or rented falls into this category of personal property or income taxes. So those are the main kind of categories of all of these different kinds of taxes. And no matter how inventive they get down to the basis of being either a tax on a transaction of a buy and a sell of something, or the licensing of something, or some other kind of activity that is either levied on you because you are an attorney. You must pay your bar dues every year to support the Bar Association, which is a quasi-governmental agency, and that is in a sense a tax. So there's lots of things, way to look at these. Okay, now the important thing to remember at this point is not all these different kinds of taxes, but to understand that as genealogists, all of these different kinds of taxes create tax records. They have tax rolls, they have real estate tax listings, all sorts of records out there that have been created throughout the entire history of the American continent. It would not matter if I were talking about the Southwest with the Spanish and subsequent Mexican interests, or in the South with the Spanish interests or the French interests in the Midwest and the upper part of the country, or England, or whoever was involved. There were still taxes involved. If you recall your history at all, you'll realize that one of the major instigations of the Revolutionary War and why the colonists rebelled against England was because of what they called improper taxes. The Boston Tea Party, where they levied a tax on tea, and they decided to throw it all in the bay instead of pay the tax. So here's some unusual taxes. If we go back into history of the United States, before that into the colonies, in England, These are primarily from New England and from the eastern colonies. So let's look at this, a pin tax, okay? Literally, they were taxing each pin that you owned. Now, when we say pin, I'm not saying pin and I mean pen, like a writing instrument. We're talking about the little metal things you use to put your clothes and pieces of paper together. In other words, you had to account for every pin because there were pin taxes. Okay, some of us would probably go broke if we went around our house and counted up all the pins we have. But back then they were a big deal. Window taxes. As a matter of fact, the window taxes, was in England, but it was carried over to the colonies. Window taxes did not get barred until almost recently. They were still having window taxes in England until just not too long ago. So that's not important. I mean, really, seriously, however many windows you had in your house, you paid a tax for each window. Okay, some of us who lived in houses that we call glass houses probably would have also gone broke. Closet taxes. Okay, so the number of closets that you had in your house, you got taxed for each closet. What would be the effect of this is people would build houses without closets because they would try to avoid the taxes. Now, it was pretty hard to build houses without windows, so they get around that. They couldn't pretty well get around to that, but they would try that. Tea-tax, of course, I've already mentioned the tea-tax. There's also been a tax on tea. If you look at products here in the United States today, there are still products that, until very recently, were individually taxed, and there still are individual taxes on things like alcoholic beverages, different kinds of cigarettes, gasoline, all sorts of things have individual taxes. So this isn't like out in the very strange world. This is actually what was happening. Playing cards. Now, one of the things that I did when I was very young was carried over until probably until I started getting overwhelmingly involved in genealogy, was that I was interested in postage stamps, and I had a rather extensive and still have a rather extensive stamp collection. One of the items that were collected by philatelists were playing card stamps. Each of the packages of stamps used to have a red stamp that would go over the opening, and that was actually a tax on that particular item. You had to have a stamp on it. Now, talking about stamps, in the not too long ago in the legal world, the government would charge taxes on documents that were filed. If you were to record a deed, for example, or to file a lawsuit, or you had to levy a judgment or something, you would have to pay a fee for that. And those fees were represented by document stamps that were put onto the documents. And so that's actually a form of taxation. Excuse me. Hats. I think that was another one that survived for quite a while in England, and probably here in America. Salt tax. This is a very old tax, by the way. Around the world, items like salt, which have had a high trade value, have always been taxed. Now, let me go back and kind of, before we continue on with this list, kind of remind you of the purpose of why we're talking about this. Each of these taxes creates records. In other words, there was a tax roll, a levy roll, where the government at the city, at the town, or county, or state, or federal level would create a list of people who owed the tax, and then there was a bureaucracy that would collect the tax, and there would be tax notices and the publication of tax lists. Now, interestingly, in doing some research back into my family in Arizona, I was looking at old newspapers from the late 1800s and the early 1900s, and finding that the county would list in the newspaper the lists of all of the people who had failed to pay their property tax when it was due. So you can get all sorts of interesting lists of people, and what we do with those, and I'll talk about that in just a moment. Here we go. In England, they did levy tax on televisions, and I'm not sure if that isn't still in effect. It might not be. And fireplaces and bricks. Okay, so you've got pretty much everything. You're gonna tax the bricks. You're gonna tax the real estate. You're gonna tax the fireplaces. You're gonna tax the windows and the closets, and any pins that they happen to have, and any hats or hat pins they happen to have. And if they're eating salt, then they're gonna get taxed on the salt. So pretty much got everything covered as far as what you were doing and why you were living. So the question then comes up is, why would we search tax records? What conceivable reason would there be for looking at this stuff? And the answer is, they can tell you very specific and valuable information about your family. One of the most valuable things that I found in searching through early New England town records is looking at the tax rolls, because you can watch the children of a family as they come of age and get their own farms and their own houses because they go on the tax rolls. And then you can watch people leave the town and move away when they leave and disappear from the tax rolls. So if you're wondering when your family left Massachusetts and moved north into New York, or up into New York, upper New York State, or moved into westward into or north and west to the frontier, you can basically do that by looking at the tax records, and they will give you almost to the month the time in which they disappear from the tax rolls, and that will tell you when they left. So there's some really interesting information that you can gain from looking at tax records. So they can contain, so this is the one that I was just talking about, the exact entry and departure of a family from a particular county. That may become extremely valuable, because once you know they've left the county, then you're not going to keep searching for records for them. And then you can go try and find out where they ended up, the next place they ended up, which would probably be in a migration pattern as to what land was becoming available at that particular time. If you know your history carefully, you should know pretty well which direction they went after they left the East Coast and the colonies, and which direction they made across the country. Whether they were in Virginia and crossed the mountains into Kentucky, or whether they were further south in North and South Carolina and crossed the mountains into Tennessee, or went further south into Georgia, or then on down into Florida, or moved west across Georgia into Alabama and Mississippi and Arkansas, then you can tell that from the tax rolls. And the tax rolls are pretty well documented. And although this is not something, by the way, the tax rolls are not something that you usually find on one of the larger genealogical websites. So if you're thinking of going to Family Search or Ancestry, or to Find My Past, or one of the other, My Heritage, or one of the other large websites, you're probably not going to find the tax rolls. These tax rolls are going to be in the local, county, state, and federal government files, and may only be available in the larger archives, the real document archives. And it is very, very possible, however, that some of those records have been microfilmed. I would be sure to check the Family Search catalog for tax records for any of the counties and other places in the United States. Tax records may tell you about the personal and real property owned by your ancestors. You may not be able to identify that property easily, but the tax roll may give you an idea that they owned property, and that you should look further into the land and property records to see when and how they acquired the property, so that you can get additional information about the family and the members of the family. By the way, those records in land and property records are probably one of the best sources for finding the spouses, the uh, wife's maiden names in different kinds of records. Okay, so what more? What else are we going to benefit from tax records? First of all, births, marriages, and deaths all uh, have their echoes uh, in the tax records. As people added family members, or if they became enlarged their families, or they got married, or died, all of those particular things may have occasioned the payment of some kind of a levy or a tax. Death taxes are very prevalent. Um, the reason why when people usually ended up paying the PIN tax was uh, they would have they would die, they would have a will, and the will would be probated, and because of the probate, the court would appoint people who would go out, the appraisers who would go out and appraise the value and determine the value of the estate. The reason for determining the value of the estate was very simple. There were taxes, and the taxes were on the specific items that they may have owned in the estate. In addition, they could have had a tax levied on the proceeds of the estate, what we call estate taxes today. In the United States, we have always have had for many, many years an estate tax on the transfer of an estate. It's actually a transfer tax. Uh, they don't necessarily tax the estate as it is, but the government says we're taxing the transfer of the money from the estate to the heirs. So it's actually owed by the heirs to, and it's actually collected from the proceeds of the estate. So they get around the idea that they're taxing dead people. Okay, and land acquisitions and sales was a very, very basic area where people would end up paying some kind of a tax. I mentioned a moment ago document stamps. Most of the sales of property in the United States required either a seal or a stamp or some kind of acknowledgement, and that was not necessarily a cost. And there's today we have what they call recording fees, where when you execute a deed to a piece of property, then you go down to the county recorder where it's going to make the sale official, and they have laws that say that the sale is only complete or official when it's recorded. And so the recording process then generates revenue for the county, because the county then charges you a fee for recording the documents. So there's lots of innovative different kinds of ways, and all of these different remind you this periodically as I talk about this. I'm going to have to keep saying this because it sounds like I'm talking about things that are absolutely no interest whatever to anybody except the people paying these taxes. But on the other hand, to genealogists, every time I say that there's a tax being paid, I have to remember there's a document or record being created. And that document or record may be the crucial document or record you need to identify your family and to differentiate your family from somebody else who has exactly the same name and the same name kids and the same named wife and everything like that. Okay, livestock ownership. Since the day of actually long before anybody came to America, livestock was subject to various levies and taxes. One of the ways that taxes were levied was because of brand registrations. Okay, when we think of branding in the United States, we kind of generalize that to cows, and we think of cowboys out there branding their cattle, and actually that process of branding was a little bit more goes back real anciently. This is something that goes way back into history. But because of the branding process and the ownership of that, when they registered a brand, they had to pay a fee to register the brand. So there's taxes on the brands. So this is not something that they didn't people didn't think through and come up with a way to make some money. Um, it, telling taxes also kind of tell you in a very direct way the relative economic status of your ancestor. Why is that important? Well, if your ancestor was a pauper, if they were completely insolvent, owed money when they died and didn't have any personal property that was worth counting or taxing, then the records of that person are going to be very, very they're going to be very more difficult to find and identify than a person who has a larger amount of property. And the more property the person has, up to royalty and the king, the easier it is to identify that person. So relative economic status is like taking the temperature of your ancestors' uh, ability to be found. The more property it is, the hotter the temperature is, the more likely you are to find documents. And the colder it is, and the fewer records there are because they were poor, is an indication that you're going to have a fairly small number of records that may indicate who these people were and what they did. Next is local conditions and history. What's going on in the community is very much a reflection of the tax environment. Uh, in the early part of the country, if taxes and other things became too excessive, the people would simply pull up stakes and move someplace, usually more towards the west and south than they would towards the north and the east. But they still moved away if they thought that local conditions were too bad. There was always a sort of grass is greener complex idea in the United States. We always felt like you could go someplace else and do better. So that was another reason why looking at the taxes is an important thing. It tells you about the migration and the changes that were coming to the communities. I've already mentioned this, but differentiating people with the same name is absolutely one of the best reasons for looking into all these kinds of detailed records, whether they be tax records or land and property and other things like that. Because right now, in doing some research in New England, particularly in Rhode Island, with our family, we are confronting the possibility that the named immigrant ancestor to the United States is in fact more than one person. That not that there were more than one immigrants, but that there are people with the same name who have gotten confused. And we're looking at these more local and very specific records as probate records and land records to see if we can identify more than one person with the same name. We may be wrong, and we may end up having somebody who just moved around a little bit, but it looks to me like we may also have that problem. Okay, so where are all these tax records? I mentioned that they probably are not in the larger online genealogical database programs, but they can be found. They're sometimes hidden. Now, the example here is New England. New England's records are extremely extensive. Any of the records of any of the colonies, and from the arrival of the earliest Europeans to the time of the Revolutionary War in the United States and onward, to created the United States and onward through the United States up to the present, those records, the tax records, are sometimes embedded or contained within the records of the county and land and property records and the court probate records and many other places where they just may be found. So you might want to start searching in the big databases. I'm just saying that there's not a lot of times that there's extensive tax records beyond maybe one or two different kinds of tax records. Now, you might want to look at state and county archives and libraries. There's an interesting phenomena in genealogical research in the United States. We call them burned counties, and burned counties were those that were where the courthouse burned, and the courthouse being burned is kind of what we call a bugaboo. Excuse me. That's not really as much of an issue as it's made out to be. So what happens, and the question I have for people sometimes is they'll say, oh, well, all my family's records were lost when the courthouse burned. And you go and say, wow, I guess after the courthouse burned, they didn't have to pay any property taxes or any real estate taxes in your state, in your county. That must have been a nice place to live after that courthouse burned down. And they'll say, well, what do you mean? And I said, well, you just said all the records, so how did they know who to tax? Well, I think they kept taxing. Well, yeah, so didn't the tax records somehow survive the fire? Oh, oh, that's an interesting thought. And the answer is the county had to rebuild the courthouse. Where would they get the money to rebuild the courthouse? They'd get it from the taxes. Where did they get the taxes? From the people. How did they know who to tax? There were the records. Those records either survived the fire, or what is even more likely, they were reconstructed. The county immediately went out and identified all the property that needed to be taxed and created a new tax roll, assuming the old tax roll was destroyed. And then they would go back and try and determine who owed taxes and who didn't owe taxes. And they probably would ask for your tax receipts. And if you didn't have a tax receipt, they'd say, okay, fine, you still owe the tax. Okay, whatever. And anyway, however that process occurred, the fact that the county's courthouse burned down did not destroy all the records in the county. And so genealogists who automatically assume that the burned counties are their ancestors' records were lost in that burned fire or simply don't have a clue about the historical reality of what happens if those records happen to be lost. They certainly weren't going to stop taxing. And there's lots of other things that they had to keep going and reconstruct too. So where are the records? They're sitting in the county courthouses. The tax rolls, the tax records. Now, here's one of the problems. The problems is that the county is not really going to be happy for people to start poking around in the tax records. Why? Well, you can imagine a lot of different reasons for that. The easiest one for me to imagine is that they're overcharging people and somebody else is benefiting off of the tax rolls. Well, be that as it may, whatever the core reason is for not wanting to disclose the tax records, they're not as easy to obtain and to get access to as some of the other records that we might have. The National Archives of the United States, by the way, has all of the income tax records back even to the Civil War. So we're not going to lose any particular records if we start looking for whether or not our people paid income taxes back as far as the Civil War. In basements and attics, it's always a good place to look for records, and particularly for records about what kinds of things the people bought, sold, and whether or not they paid taxes. Now, to prevent that, certain people shred or burn or get rid of their own tax records. So that basically limits people from limiting or looking back at their tax records. But they probably didn't burn or destroy the records kept by the government agencies. So even if your tax form after whatever statutory number of years is destroyed, you can make sure that the government doesn't destroy their records very often. Okay, so basically, one place to go get these records are probate inventories. One of the things that happens in the course of an estate after a person dies, there's the appraisal to determine the value of the estate. But before you can determine the value, you have to do an inventory. So there is a requirement, even today, that the estate provide the court with an inventory of the assets. Now today, the inventories are generally very vague and very general. And in many estates, for example, in Arizona and Utah, there is a kind of a minimum level for the court's interest in an estate. And so the estate inventory today might say something like a house and personal property of less than the value of $10,000 or under the value of $50,000 or whatever the threshold is that makes the court look more specifically at the items that are in the estate. Now, that was not the case back 100, 200 years ago, even a little bit later than that. Basically, they had to list every single item in the inventory. And so these old probate cases list everything, every spoon, every saddle, every harness, every chair, everything that is in the house, every feather bed, every piece of linen, anything that shows up. So this really gives you, these inventories give you like a window looking at what was in this person's house, how did they live, what level of economic level did they have. So the reason why these inventories exist is because of the tax laws. So the tax laws, we are the beneficiaries of these detailed inventories because they had those weird taxes like pins and windows and things like that. So here's some examples of tax records. This is a tax record from Ohio from 1800 to 1850. And I guess on its face, most of the genealogist genealogical researchers would look at this and say, what am I supposed to do with this? How am I supposed to get any information out of this? Well, an individual tax record probably has very little information, but all the tax records for a person begin to show exactly how that person lived. And in many cases, as I already mentioned, they will tell about major events in the life like marriages and births and death. And there's other things that can be found through the items that are listed and the way they're listed on the tax records. Okay, so here's a different kind of tax record, a tax book. This one is from back in the 1800s. And these are Massachusetts Boston tax records. Now, you think of the tax record as being like a directory that shows where every person lived and exactly where they were in their condition, in their living conditions. So if you have trouble finding somebody, you may be able to go to the tax record and get the exact information about where they lived, what they did, what kind of business they were in, and all of these things suggest more records that could be found about that particular individual. When we're talking about genealogical dead ends or brick walls, as we sometimes refer to them, what we really are talking about is a lack of looking at all of the records that could possibly be available for the people that we know about. So the more we know about our own people and we go back, the more likely it is we're going to find the next person back. So for example, our family, as I mentioned, is researching in New England, in Rhode Island, for the immigrant. but we're not specifically looking for the immigrant as much as we are looking for records about the person that was our direct line ancestor, who was supposed to be the son of the immigrant. So now we're focusing on the son of the immigrant because that's where we'll have more records, and we're more likely to find out who he was and who his parents were through looking at his records than we are by jumping over that generation and going back another generation. Okay, so here's in London, England, land tax record going back to 1692. Now, well, I mentioned one of the difficulties. And that is that there are records that that help us to tell who our people are and differentiate them from people with the same names. And England is a classic example of a place where you're going to find lots of people with your same name as your person. I mean, inevitably you're going to run into someone whose name is very common as one of your ancestors. And the land tax records are one way of identifying and differentiating between individuals. So here's another one. This is an IRS tax assessment list of 1862 to 1918. And we think of the census records as being helpful in finding our ancestors. Well, perhaps we should be more aware of the fact that these tax assessment lists exist, and they are probably at least as inclusive as the census records. Anyone who could be identified as a living, breathing human being probably got listed on the tax record. So we have a lot of a possibility here of cross-checking. Sometimes people say, well, I never could find him in the 1920 census, or I couldn't find him at all in whatever census year. Well, okay, so now you go to the tax records or the land records or something else to see if there is other information that may help you identify. Generally, the biggest reason, of course, why you can't find them in one of the records is because they moved. Well, the assessment records will help you to find when they moved. Okay, so this is what the record looks like. The list of people. In fact, there happens to be a tanner on this list, and that was interesting to find that. And you can see what kinds of things. They're Class B licenses, clothing, retail, all sorts of different things here that they are getting a license for. The assessor is levying taxes. Okay, so in the FamilySearch.org catalog, if you go to the catalog, most people start with the records. They're called historical record collections, and they do a search by name, and then they come back to me and say, well, I searched in FamilySearch, and they didn't have any records of my family. And the answer is, well, you only probably searched maybe 10 or 15% of the records. And they say, well, what do you mean? I say, well, most of the records on FamilySearch are still in microfilm. In fact, I just got an updated figure from FamilySearch, an official person at FamilySearch who said that approximately 50% of the microfilm records that FamilySearch has now been digitized. I've also heard statements that only a smaller percentage, like 10 or 15% of those records have been indexed. So there's still about 90% of FamilySearch's 85, 90% of their records that have yet to be indexed and are searchable. So they're sitting out there in microfilm form. And if you go to a place like United States, Utah, look at taxation as one of the categories in the FamilySearch catalog, you'll see the types of records that may have been kept. Here's the assessment books for the territory of Utah, 1867 and 1862. Okay, so at an early time period. Now, this also shows what I said earlier, that you may have to dig a lot further into archives and other records even county records and things like that. Perhaps even we found records, tax records in Utah, in the special collections departments of universities, all sorts of different places where the tax records may have ended up. I ended up in the Brigham Young University Harold B. Lee Library, L. Tom Perry Special Collections Library. It's a big long name for the place downstairs from where we're seated here doing this webinar. And one of the things that I did was do a digital copy, took pictures of the Utah County Tax Assessment book for a researcher who was doing some research. And this was the only place where we had access to that particular record. Okay, so once you find that in the catalog, here's the assessment book record. And we can see that this one is on microfilm. And as the one that I found in the Special Collections Library at BYU, it was on paper. So we're talking about turning the pages of a book and taking pictures of the pages so that we could use that. Of course, we had permission to do that, and there's certainly no copyright or other restrictions on a public record like that, like a tax roll from the 1800s. Okay, so where else could you look? And I'm going to tell you here is the record for that for those tax records from the Utah County in Utah that I found in the Special Collections Library. So there was one copy available for use in Special Collections. Now, what does this mean? This means that if you're looking for these kinds of records, you will probably end up looking in the larger libraries in your area. Now, just as an example, if you happen to come from North Carolina, you'll find out that there are dozens of colleges and universities with special collections libraries in that state. And any one of those libraries could conceivably have been the place where the records that you need for your to do your research may have ended up. So we can really begin to see that there's, this is kind of a very open-ended area that implies lots of other things. In other words, there's lots of other records out there that are still in that special collections library that are probably in unique copies, one copy. In this case, this book was the only copy, period. No other place in the country, in the United States, in any place, had a copy of this particular book, and it was not digitized, and it was not in the Family Search or Ancestry catalog, and it wasn't on any of the big online sites. It was sitting in paper form in a library in Utah. Okay, so if we go out there, now let me kind of explain how this happens. If you have a major library, any major university, a college or university, they are going to have a library. If they have a library and it's any substantial size, and the larger universities are going to have these libraries, they have what are called special collections. Those special collections libraries are to house documents that are either unique or of such great value that they will not be circulating. They will not be out on the shelves for people to look at and check out and use. They will be sitting in a collection place, an archive of some kind, and then you will have to look and find them in the catalog and ask to see those through greater or less kind of a formality depending on the institution, and look at them in the library, and they cannot be removed from the library. Okay. In my case, we didn't want to remove it at all. Obviously, what we did want to do was take pictures, and we got permission. We had to fill out a form, and when we filled out the form, they allowed us to take our camera in and take pictures of that particular book. And so we sat there, my wife and I, she turned the pages, I took the pictures. We took about 300 images. There were about 600 pages in this book, and that was about the end of it. Okay, so once you find the item, And for instance, this is North Carolina, Camden County, North Carolina, as extant tax records, 1782 to 1890. And that's a book that tells which tax records are available in that county in North Carolina during that time period. So there's ways to get into this, ways to find out uh, when and where. But the big point here is that it's necessary for genealogists to realize that this category of records has value. And when I said, perhaps when you get into this and you looked and you saw that I was going to talk about tax records, you went, who could, who would want to know about that? Well, this is why we hold these webinars and why we do talk about some of these topics that sound less desirable, less popular than other things that you have. Now, let me mention this. This is kind of an interesting observation. I would suggest if you go to some of the large conferences around the country, look at these large genealogy conferences. I'm not going to name names, but there's large genealogy conferences, and look at their lists of topics for all of their classes that they're going to hold during their conference, and find out if they're going to hold a class about tax records. I would assume that that would not be the most common thing you would find. Okay, state archives. Now, state archives are in the business of keeping and preserving state records, so they are a very good place to go to find out. Sometimes they have online catalogs. Sometimes it's necessary to simply go talk to the people who are the archivists, who are maintaining the state library, the librarians, and ask them what kinds of records they have, because they can tell you. Had opportunity to hear the state librarian for the state library in Arizona, and one time in a presentation she spent an entire hour listing off all of the documents that they had in the state library, the different kinds of documents. Okay, so there's a very, very good way. This is the Arizona State Library and Archives and Public Records, and that's another place where you can go to search and enter your keywords. And in this case, I did a keywords for tax records, and I got 53,600 results. Okay, so interestingly, how many records they had in the state archives for taxes. Another state archives records, this is the Utah State Archives, and they have an inventory of tax assessment rolls from Salt Lake City, Utah. So you can get in there and look at what rolls they have, what the lists there are, and then you can go to those lists and look for your individual people in those lists. Here's another example. This is Grayson County, Texas. And I'm just picking, of course, I just picked some counties at random. And you can do a property tax search as well as a deed record search, and lots of other information. So there's a property tax record search. Most of the counties in the United States for real property have a county assessor, somebody who's assessing the county property taxes, and they generally have some kind of a list of the people who are paying taxes or who have paid taxes in that county. Sometimes the current list is online and the old lists are archived, but they're still available, and the history of the payment of the taxes on the property is usually available. And that can also be in the state records. And Massachusetts, for example, has a statewide Massachusetts Assessor and Property Tax Records Directory, and you can go there to get information about where the taxes records are. As far as the United States is concerned, the federal government, you go to the National Archives and they have records of the income taxes, and they have a book, tax records and I mean, this is an article in the National Archives journal that they publish periodically called Narrations. Most of the librarians are people acquainted with libraries are aware of this particular publication. And Narrations has an article on tax records at the National Archives. And this, you can find this by searching online with Google search. Municipal records, here's an example, New York City. Property tax records, they have property tax records for New York City has their own property tax. Some of the other cities, larger cities, doesn't even have to be too large before the municipalities begin levying taxes on property and sometimes on utilities. Historical societies, this is the Virginia Historical Society, and you're looking here at the collections, search the collections, and you can search the collections for resources for researching Richmond properties in Virginia, and it says the Library of Virginia holds an extensive collection of Richmond land tax records and personal property tax records dating from the late 18th century. Okay, so you can begin to see that by searching in these different kinds of repositories, you're going to find significant numbers of records. Don't forget basements and attics. People have a tendency to keep their tax records. Some people don't, some people do. And let me remind everyone that this is kind of my one of the most common things that I say, and I say it about very many things, is when people tell me they've looked everywhere, I always counter with the statement that you'll never run out of places to look. No one person has enough time in their lifetime to look in all the different places where we could find records about families in the United States and the rest of the world. Okay, well, thanks for watching. If you have any questions, you can post them. Remind everyone that these webinars are recorded and uploaded to the BYU Family History Library YouTube channel, and ask you if you would please subscribe to the channel. I guess the purpose for that is we would like to get these various webinars as much of an area of exposure and distribution as possible. They're free for the user, and we encourage you to use them in classes and refer to them at any time. And thank you for watching. Oh, question.
So we do have one question from Joanne. Says, any suggestions for getting probate records in Arizona? I keep getting told I have to be a direct descendant.
Okay, so you're getting, I'm getting double. Oh, I see, okay. Okay, Arizona probate records are kept in the court system. Each of the courts have their own records. So what you have to do is go to the county records and see where the county court records are held. It's usually the clerk of the court. Maricopa County has been digitizing their records for some time. Most of the court records are online and available through the court system, but the outlying counties may or may not. I think Pima County has a lot of their records digitized, but I know that the smaller counties do not, but they still have the records, and you may have to get in the car and drive to Holbrook or St. John's or Safford or someplace to look at the courthouse and find the records. So, but they would have, the probate records would be part of the county records in those states. In any case, what I would do is check in the larger repositories. I'd look on Ancestry and Family Search primarily for local county records. I know that Ancestry's coverage of Arizona is spotty, but I know that there are just a whole lot of records about the various counties in Arizona that have been digitized and are on Family Search's catalog. Okay.
I think that is all the questions that we have. If you have any more questions, please write those in now. I'll make sure we get those answered for you. We'd like to thank James for his efforts in putting these webinars together. They are really helpful, and we hope that you can come back and watch them on YouTube as we post them there, and continue to learn and use these resources, and make sure to let your friends and family know. Also, if you have any feedback for today's webinar, feel free to write that in. We'd love to hear from you, know how we can improve our webinars um, and continue to help and teach everyone. So thank you for joining us today, and we hope that you'll be able to join us again tomorrow, and we will see you next time.